I'm a certified financial planner, and I'm going to break down for you whether you should buy crypto in your own portfolio. And before you think I'm going to shun you and shake my finger at you and tell you that you shouldn't buy it, I think the answer might surprise you. You don't want to miss it. Welcome back, guys. We're breaking down whether you should own crypto in your portfolio. If you like today's content, be sure to like and subscribe to it. And of course, if you need one-on-one guidance, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So I think the general consensus, at least from the financial community, and I'm not talking about, the crypto evangelists and all the people that ride really hard for crypto. I'm talking about people that are, professionals and how you should construct a portfolio. The general consensus really is that you should stay away from crypto. It's a speculative asset class. You shouldn't touch it with a 10-foot pole. Stay away from it. Only, Reddit crazed crypto maniacs are involved with that stuff, and you should stay away with it. And really the main arguments that you see why you shouldn't touch it is that, it's greater fool theory that, if you buy it, the only person that's going to take it off your hands is someone dumber than you, is effectively the argument. There's also a lot of speculation, right? There's meme coins and all that stuff that people tend to talk about as, crypto being bad and a scary thing to invest in. But here's the fact, right? I mean, and this isn't me being biased or telling you that you should buy crypto, but the reality is that crypto as an asset class has been the top performing asset class really of the last decade. And it's not even close. It is above and beyond the top performing asset class. And what's even crazier is that we've seen a bear market unfold globally and a recession, and yet it still has lingered around and is roaring to new heights as we speak. In addition to this, I think most can agree that blockchain technology, the technology itself, is very legitimate. I mean, you have, major banks, global banks across the world looking at blockchain technology for their own currencies, right? So, I mean, the reality is that perhaps we're very early innings with this stuff, but in some way, at least in my opinion, I think that blockchain technology is going to find its way to be integrated into our financial system in some way. Again, I don't know how that plays out, but I think many agree that it's going to stay. And so because of this, when I have a client, friends, family, whoever ask me if they should have crypto or buy crypto for their portfolio, I generally don't have a problem with it. And that usually throws people off. Most people think that I'm going to shun them and tell them that they shouldn't do that. But I actually don't have that stance. I'm actually totally fine with a client having cryptocurrency within their portfolio. However, the issue with investing in cryptocurrency is that most investors are pretty darn bad at investing with cryptocurrency. They're terrible at it. And I find that a lot of prospects, new clients, people that I know have lost a lot of money with investing in cryptocurrency for the following reasons. So number one, poor sell discipline is perhaps the biggest reason why I see people lose money when they invest with cryptocurrency. If you saw our episode about a month or so ago, we talked about why most investors have no business investing with individual stocks. And spoiler alert, it boils down to the fact that they lack having any definitive exit strategy and effectively have very poor sell discipline. What that means is they invest in something It makes a ton of money. They log into their computer, they see all that green and that they're up a bajillion percent, and they get hooked on that feeling. They love it. And they turn investing into a blackjack table, right? They see all those chips stacked up at the blackjack table and they can't walk away. Well, with cryptocurrency, again, this is just my opinion, I think those emotions are amplified by 3 times. And the reason for that is that crypto is such a volatile asset class. Yes, when things get ugly, they get ugly. But when the going's good, people can be up a lot, right? There's times where people could invest in crypto and be up over 100% in a month, right? I mean, it's crazy. But the issue with that is that people get hooked on that. They hear the stories of how, somebody back in, 2009 invested in Bitcoin with $1,000 is now worth, $100 million, right? And they think that could be them. And so they hear these type of stories. And so when they see a large unrealized return with their investment, they don't want to leave. They don't want to ever sell. And that's where I have a huge issue. Just because you have large embedded unrealized gains doesn't mean you actually made anything. The second big reason why I see people lose money with crypto is that it tends to be too much of their portfolio. And we'll talk about that a little bit more in a little bit. But bottom line is, crypto is a highly volatile asset class. And when it starts to consume too much of your portfolio, when you start to see those large swings and you're casually down 40% in a month, right? That can be a really tough pill to swallow if it's too much of your portfolio. And so what ends up happening is that folks abandon ship. They lock in that massive loss because they cannot take the volatility anymore. And the reality is that if they knew how much of that investment was consuming their portfolio, maybe they could manage that feeling a little bit better, right? So bottom line, if it consumes too much of your portfolio, you're potentially setting yourself up for a lot of risk and a lot of undue volatility if you're not comfortable with it. The third way I see a lot of people lose money with crypto is that it already is to some degree a speculative, more volatile asset class. I mean, it's no doubt volatile, but it's speculative. And so people want more, which is crazy, right? I mean, if investing in something like Bitcoin wasn't already volatile enough, they want more volatility. They want the chance for more returns. And so they chase kind of these more smaller or mid-cap sized coins, and they lose their shirt, and they lose a ton of money because they're taking even more risk by chasing these coins for the chance of hopefully one of them goes up 5,000% in a month, and I could make a ridiculous amount of money, right? I mean, that's another huge reason why I see people lose money is that they get greedy, they chase volatility, they chase even more speculation, and they end up losing their shirt. The fourth issue why I have a problem with crypto investing in general is the poor tax reporting on it. I think things have been cleaned up as of recently with some of these Bitcoin ETFs or crypto ETFs. I think helps clean things up to some degree in terms of getting 1099s and things of that nature. But I see all the time folks have accounts with crypto that they buy and sell and they trade in, and they don't report any of the gains or losses in it. So that in and of itself is a huge issue. And if you aren't going to be responsibly reporting the taxes on your investments, then you should probably stay away from that investment if you do not have that responsibility. So those are some of the big issues that I have with crypto investing and how I see people mess it up, lose a lot of money, and run into problems. But if you are going to invest with crypto and you've made that decision and you want to do it, here's how I believe you can do it responsibly. First and foremost, I believe crypto kind of falls into a more speculative asset class. And because of that, it should, generally speaking, consume no more than 5 to 10% of your overall portfolio. This is the same principle that, let's say, a high net worth individual that wants to speculate a little bit and they want to start, investing in, let's say, venture capital, right? That's the general guideline that you would give them. Venture capital investing is speculative. A lot of the companies are not going to work out, but some might. Therefore, no more than 5 to 10% of your portfolio should be allocated to something that's speculative. Same principle, I believe, should apply to crypto. You can disagree with me on that, but again, that's just my personal take. So once you've defined how much of it should be in your portfolio, again, let's just say for the sake of argument here, it's 5% max of your overall liquid portfolio. From there, you need to have a definitive exit strategy for the investment. Again, as I mentioned earlier, a lot of people, when they invest in crypto, end up not making money despite it going up so high. Just the other day, I was speaking with somebody and they had told me how wonderful crypto is and how it's the wave of the future and how they'd been investing in it over the last decade. And so my assumption when I heard this was they've made a ton of money. They must be loaded. But this was not the case. This person told me they had not made any money with crypto, which is crazy to me. I was like, how do you invest over the last 10 years and not make anything? But the problem is that this individual would ride the highs, never capture any profit, and then when things got really nasty, would constantly exit. That's what happens with a lot of people. So if you are going to invest with crypto, you need to have a definitive exit strategy. It's a very simple example. Let's say that you invest, $5,000 into, Bitcoin. If Bitcoin goes up so much to the point that now your initial investment has gone up from $5,000 to $10,000, well, maybe at that point, let's take some chips off the table. Let's go ahead and cash all the way out. We've doubled our money. That's a fantastic return. Or maybe we take half the profit off the table. We take a $2,500 profit for ourselves and we leave the rest invested. If it keeps going up, great. If it pulls back a little bit, we've pulled some chips off the table and taken a profit. So again, you need to have a definitive exit strategy so that you actually lock in some profit and make money if you're going to go down this route. The third thing that you need to keep in mind if you decide to invest in crypto, and this is going to sound ridiculous, and I can't believe I even have to say this, but you have to remember, buy low, sell high, right? When you're teaching a fifth grader the basics of investing, oftentimes you tell them that you should buy things that are low priced and sell them at a high, right? I mean, it's extremely basic. Everybody knows that expression. Yet when it comes to crypto, people tend to forget it, right? And what I mean by that is that when I get asked the most about crypto, it's one reason why I'm doing this episode right now with crypto at all-time highs. People tend to ask me it when crypto is on an absolute tear, when it's making all-time highs, when Bitcoin has rallied, 70% in 2 months, right? That's when people come out of the woodworks and say, hey, should I hop on that train right now? Again, I'm not saying you shouldn't, but what I would say is that I would consider perhaps waiting for a pullback or letting your emotions at least settle, right? There's a lot of the time you're asking this because you have FOMO. If you're asking this just because you have FOMO and you don't want to miss out, well, that's not a good reason to invest. And buying something at an all-time high just to ride it back down 40%, it could potentially be a big losing strategy for you. Now, if you want to buy it and you're going to hold on to it for 10 years and you're going to say, hey, I don't care what happens, I'm going to look at it in 10 years and sell, or you have a definitive price that you're going to exit at, you're not going to freak out if it pulls back on you, then go for it, right? But if you are wanting to just simply buy in because everybody's talking about it and it's at all-time highs and you're missing out, then that's not perhaps a reasonable thing to do. And you should remember that old adage, buy low, sell high. So bottom line, guys, if you own crypto, I'm not saying that you should dump it. If you're interested in getting into crypto, I'm not saying you shouldn't do it. But you need to approach this just like you would with any other investment. You need to ask yourself these questions. You need to ask yourself how it fits in with your overall portfolio. And if you are going to make that decision to add it to your portfolio, or you already own it, you need to understand how you're actually going to profit from the investment. Because again, this is a newsflash. Just because you log into an app and you see on the screen that you're up 200% in a year, it doesn't actually mean anything unless you've locked in a profit. So there you have it, guys. If you need help with your own portfolio, by all means, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. It's been a ton of fun. We'll see you next time.